All right, let's get down to business. As Washington and Tehran continue to negotiate, we learned the administration will allow Iran to sell their oil for U.S. dollars. Okay, why is this a big deal? Okay, it is a decision that upends decades of U.S. policy that was meant to make it harder for them to develop their nuclear program. For years, Iran had sold oil largely to China through a secret fleet of tankers. Well, now it's on. It can export oil to the open market and this time be paid in dollars. And according to Steve Ratner, that could bring in as much as $10 billion for Iran in the next 60 days. And granted, it is only 60 days. But do we really believe that these negotiations are going to be done by then? Or are they going to be extended? I sure think they are. So the administration is giving Iran one of the things that it has desperately wanted for years and years before Iran has delivered on the #1 goal the United States had going into the war, ending its nuclear weapons program. Let's bring in MS Now business analyst Ron Insana and Dan Nathan, co-founder of Risk Reversal and a CNBC Fast Money contributor. Okay, Ron, the markets are going to open in 2 minutes, and we're definitely covering it. But I want to talk about who benefits from this move with Iran first. It blows my mind that we would offer such a concession.
Well, yeah, and Stephanie, if there's also an unfreezing of assets that total somewhere in the neighborhood of $12 to $24 billion, Iran benefits distinctly by this. And there are some, obviously, military analysts and others who are concerned that Iran will use this to reconstitute its military force, build more missiles, build more drones, and maybe even maintain a certain portion of its nuclear program going forward. So they're the direct beneficiary of this. We are not in any way, shape, or form. And again, as you said, we're crossing a red line of our own, that no nukes, and now we're basically taking that off the table, at least in the first 60 days of negotiations, which was the principal reason the war was started in the first place.
Okay, and that's what I want to stay on, Dan, because in theory, if this happens, we could see oil prices drop. That's a huge priority for the president. But the reason we went to war to begin with was Iran's nuclear capability. So is the president basically going to tear that up, throw it out the window, and say, no, it's all about oil prices now?
Yeah, well, I mean, that's really what happened, right? If you think about the whole taco trade over the last few months or so, it really had to do with prices, right? It had to do with energy prices, had to do with food prices, and any derivatives of oil. And, you know, when you think about who benefits here, obviously the Iranians benefit, right? They have been selling their oil, 90% of it, to China. They've been selling it in Chinese currency, right? Mm-hmm. This has been a huge, huge win for China over the last few decades or so since these sanctions have been in place. And when you think about what Iran is able to do now, they're able to actually bank around the world and use dollars, right, to do that, which gives them access to whole different sorts of markets, that sort of thing, a level of legitimacy that did not exist, right, if you think about over the last 15, 20 years or so. So to me, Iran is obviously the winner here. China is the loser, and this could, cause some tensions between our trade sort of situation with China also.
All of this just begs the question, then why exactly did we go to war to begin with? It is now 9:30. Wow. Markets have opened. In the last 12 seconds, they're down almost 300 points. This seems to be led in the last day by the very same tech giants that have led the market soaring. What's going on here?
Well, it really does have to do with this bubble that's going on with the data center build out, right? And if you think about some of the biggest companies in the world, right, they are the Google, the Amazon, all these funds that are like basically building out. They're using hundreds of billions of dollars to build these data centers. And, this enthusiasm about this compute and this technology has caused, stock markets like South Korea's stock market has doubled in the last few months or so. Taiwan has gone up in a straight line. Now, our NASDAQ is up about 20%. It's just a few percent from all-time highs. But the concern right now is that this overbuild and this misallocation of resources, we have companies, including SpaceX, that just went public, raised $85 billion in IPO. They immediately come out and do $20 billion bond sale, right? Google's selling stock, Meta is selling, Amazon's selling. So if the companies are selling and you keep buying, there's got to be some sort of divergence there at some point, and that's what is coming out of the stock market right now. You see that the S&P 500 is down, 1.5%. The Nasdaq's down 2.5%. South Korea, which is made up of basically their stock market, two stocks, Samsung and SK Hynix. They made all the memory that goes into servers, that go into the data centers, down 10% overnight. 10%.
Ron, why today, though? People have been worried about tech companies and AI overbuild, overspend for months and months. Why today? Why this week?
A couple of things. I mean, in South Korea, which was down 10% overnight, it's now down 20% from its all-time high. There was some concern about the use of these highly levered exchange-traded funds, where they basically amplify both gains and losses for investors there. Margin debt in South Korea, which is borrowed money used to buy stocks, went to a record, as it is here as well. So we have a lot of people who have borrowed a lot of money to buy these big winners, and when those stocks turn on you, you're being forced to sell. And if you look across the entire globe right now, Steph, every market in the world is down. Crypto is down. Oil is down a little bit. That has more to do with Iran. Gold and silver are trading lower. So you're seeing forced selling across the board. And as Dan was saying, these big gains that we see in the semiconductor index, which was up at its peak, over 100% year to date. We're not even halfway through the year. South Korea was up 115% after being up 75% last year. This is as frothy a market as you're likely to see. Micron reports earnings tomorrow. That stock's gone straight up. So there's a lot of concern if they miss the numbers, people are going to get hit pretty hard. So listen, we've gone pretty far, pretty fast. There are shades of 1999 here. I know people don't like to hear it, but it's true. And it's a real thing. And we've talked about South Korea. We've talked about semiconductors. We've warned people that maybe you take profits, maybe you protect your portfolio. And everybody says, nope, it's different this time.
But can we stay on 1999? Because in 1999, the internet was still the future, just like AI may still be the future. But the market got ahead of itself. There was too much investment. There was too much craze around it. And that's why the bubble burst in 1999.
Well, it's starting to burst right now. If you think about some of the largest companies, again, in our stock market, in the world, they're the biggest spenders. They're spending hundreds of billions of dollars. They're going to equal trillions of dollars to basically do what happened in 1999 is you're laying all this fiber, right? So you can build, whatever was going to come from the internet. That enthusiasm caused the stock market to get into frothy levels. So if you think about what's going on right now, the early beneficiaries of this were what they call the hyperscalers. The companies that build the data centers. That's Microsoft, that's Meta, that's Amazon, that's Google. All of those stocks have sold off a lot over the last couple of months or so. And if you think about Microsoft's down 30%, Meta's down 25%, Amazon's down nearly 20%. So all of these stocks are actually seeing selling pressure. But to Ron's point, semiconductors, memory stocks, these stocks have gone parabolic in the last few months or so. Some of them up are hundreds of percent in the last few months or so. And so that sort of mania on borrowed sort of money on margin that Ron just spoke to, it does create a scenario where things can break in a very short period of time, reminding people of 1999. And you're going to have people who are so enthusiastic about this technology, they're going to say, this is a buying opportunity. And then it's going to go down another 10%. This has continued to be a buying opportunity. And so that sort of mechanism really has the ability to break the will of retail investors. You already have large institutions. They're already selling. That's why the biggest stocks in the entire market are down. Just wait until this last bastion of retail buying in those very speculative sort of names. When they give up, then you probably have a stock market that's down 20% or so.
And today is one of those days when we need to have our eye on the markets. There we have it. Market is now down 280. We are 4 minutes into the trading day. Ron and Sana, thank you for joining. Yes.
SpaceX is below $150 its first trade from its IPO, which means it's gone and lost about 33% of its value since the day it went public. And everybody who bought that stock at $225 a share is now looking at $149.